In this video, guys, I'm going to talk about sometimes you do stuff in trading, not for the profit, but for the feeling, the confidence, and the security that it gives you. Stick around. Hey guys, warm welcome to you. So what do I mean by this? You're thinking, well, what are you talking about, Mark? We trade for profit, right? And that's exactly what we do. But sometimes you will sacrifice short-term profits for long-term growth in trading. And let me explain what I mean by this. So, the majority of people look at trading and go, what's the most effective and efficient way to trade? I need to run my trades, I need to scale into this and scale into that. And that's all great. On paper, that's exactly how we should trade. But sometimes we have to do things that just boost our confidence. We have to do things that settles down our chimp, our internal voice that's telling us to do stuff we don't want to do, and make him feel secure and make him feel comfortable. So let me give you an example of what I mean by this. And this is where good traders recognize this, guys. It's not everything you do in the market is to optimize your performance. Sometimes you've got to do something just enough to keep yourself balanced and centered, especially for active traders. So let me give you an example. So example is market goes up to a level, okay? It's a reasonable level, but it's not your first profit target, right? It's a reasonable level, it's not your first profit target. And you've got that voice that's just saying, take it, cut it. It's a resistance level. It's going to roll over. It's going to do this. And you've got the other voice that says, it's nowhere near profit target one. Don't touch it. And you've got this internal dialogue. Take it, look at that, looks like it's topping out. Don't take it, you're not supposed to do anything before your first profit target. Take it back. And they're both arguing with very, very valid reasons. And you're in the middle of this going, well, what the heck do I do? I almost can't win. Yes, I want to stick to my rules, and you absolutely should. You shouldn't just listen to emotional things saying cut it. But at the same time, that's going to grate on you for a long time, because if it almost gets your profit target and comes back, he's going to go, told you, should have done this, shoulda, woulda, coulda, hindsight, Harry, all this stuff. And you're going to go, oh, maybe I should, maybe I need to change my plan and all this stuff. And it's just going to create conflict and challenge. So a quick way of getting over this is to find something that's just enough to please both. To please both of those voices that tell you to take the trade and hold the trade. And this is a great example. Market's getting there. Let's say you're trading a 10 lot. Okay, you've got 10 contracts, and just purely for example purposes, you've got 10 contracts, market gets to the level that's stalling at, it's not quite your profit target. You've got this, looks like it's stagnating, blah, blah, yeah, but you need to let the trade mature. Okay, close one contract or two. Now what that does is, that's not the most effective and efficient thing to do. The most effective and efficient thing to do is to hold the trade no matter what, hold for profit target one, and if you find you're not getting profit target ones, then you go back and reevaluate how you come up with profit target ones. So that's the most efficient and effective and logical way to grow as a trader. You set your levels, you set your ideas, you set this. When those aren't being breached and aren't being tagged, should I say, you go, why not adjust it? Or if they are being tagged, you go, yeah, and you iterate, and that's fine. But there's a little hidden point in there that's the heart of the chimp as well, that's saying, hey, I need to close, I need to do something. You can just give that something and say, hey, have 2 contracts, you're going to feel comfortable. Now, it's going to depend how loud that voice is to how much you have to give it. You might have to give it half the trade at the first half and say, hey, if I feel like closing it, I've got the urge to trade, I'm going to make progress by not closing the whole trade, because many of you out there are going, well, as soon as I feel the urge to close it, I close the whole thing. And I regret it because it goes to my final profit target. I look back on my statements and my blotter and go, if I'd held the trades, I'd be, okay. First step is to do half. When you get the urge, just close half. Close half, he's happy. You're now in a position where, okay, you're going to run it. Okay, I'm going to take you. You've covered all bases. And so if it carries on, great, you've still got half of it, reverses. None of those voices, internal voices, can say to yourself, told you, because you've dealt with it. And then when you get better at it, you can maybe give them 2 contracts or 1 contract. And you get to a point where you've just got these little things, nuances now and then, that you just need to just throw a little bit out there, just to say, here, have this, be quiet. I know that it's in my best interest to hold it for this longer position, but I'm going to do something about it. I'm going to just say, hey, that will just quieten it down. Another great example is, if you're a day trader, if you're on a day trade, let's say you caught the low of the morning, you're like, I think it's going to close at highs today, and that's your trade, like I'm going to walk away, and you see kind of some reversal pattern at a time where it often reverses, and that inner voice is saying, yeah, but take it off. That's often the high of the day. You know, you've got a good move there, you've got a good amount of money, and you've got a good kind of ATR, take it off. And the other voice saying, no, you said you were going to hold it. Now, if you allow in your trading plan, say, okay, I'll give you a tenth of my position, then you're just doing something. That might not be enough to please it, but it's just enough that you're just soothing things down. So the point is, guys, it's not always about becoming the best executor and most logical, efficient way of improving as a trader. Sometimes you've got to allow your emotion, accept that that's there, and just bring it down slowly and sort of prove to it and say, hey, you know, because it's going to shout at you, should have closed the trade, should have closed the trade, should have closed the trade, and you're getting all this noise. And in reality, you can just soothe it and say, hey, listen, there you go. There's some of the position. The same with your entry. And if you see a trade trigger set up and you go, I don't really want it. Oh, I do want it. You've got that conflict. Put one lot on. Put the smallest amount you can on to just soothe both sides. That's the beauty of being a retail trader, guys. You haven't got to put your full clip on straight away or take your full clip off. You can do what you like. So use it to your advantage, and just sometimes just put a piece out there. Put a piece on, take a piece off, you know, different levels. Now, this is more of an art than a science, but the objective of that isn't to make as much money as possible and to become the best trader possible. That's to, well, it is to become the best trader possible, but from a kind of statistics perspective, I mean, it's to just recognize there's some, you know, there's an inner voice there that's telling you to close it, wanting you to close it, acknowledging it and saying, okay, is that enough to keep you quiet? Yes, great. Well, now I've got to meet the position and I can run that on to my final target. And if it still doesn't hit it, of course, that's an operational thing that you go back and adjust over time if you're constantly missing those final targets. But at least it's not because you've got the inner voice in there telling you to close it and you close it out of emotion. It's more of a practical thing and a tactical thing. All right, guys, hope that's helped. With a different one. Take care. See you in the next one. Keep your risk managed. Bye-bye.